Good day, everyone, and thank you for joining us. This is the VList 2024 Outlook and Positioning presentation for April. I'm Darryl McCoubrey. I'm head of research at Veritas Investment Research. Like last month and all the other presentations, we'd like to start with a brief overview of exactly what the VList is. So it's something that we launched way back in 2004 that is a model portfolio of all the best buy ideas that we have throughout our independent research coverage. The analysis that we're doing is independent. It relies heavily on what I would call a forensic-like review of accounting and disclosure. It's a concentrated list. 12 to 25 names is the target, and we tend to be toward the higher end, I think, of that range currently. Lower turnover. We are sector agnostic. We can have some what would appear to be pretty bold calls based on what our team of analysts tell us. And we tend to focus more, if possible, on larger names if the value difference is, within range. Our process is, first and foremost, we rely on our team. We have a team of experienced professionals that cross pretty much every major sector in Canadian equity markets. Experience ranges from a minimum of 5 upwards to nearly 20 years. And all of the analysts are independent. They own their sector. They're giving us their very best ideas based on the work that they're doing with no kind of ulterior bias whatsoever. Once we get that list from our analysts of the best ideas by sector, we try to compare returns maybe across sector, overlay a less independent portfolio management view, maybe on what the VList would be otherwise. And then we ultimately action those changes if each member of the VList committee, there are 4 of us currently, agree to what is proposed. Just going back to the team, this is a slide that puts a name and a picture to the great team that we have here that are contributing to the ideas that we use on the VList. The track record that this team and some of the former contributors of years past have done since 1999 is quite remarkable as a firm. This isn't just the VList. This is Veritas as an independent research firm. Our buys have tended to outperform by a decent margin, I would say, and ourselves have actually underperformed considerably more than even the buys, which I think speaks to some of the intriguing risks that we can find that might be unique because of our focus on accounting and disclosure. The VList also outperforming, but one of the things that I kind of like to, I don't know, maybe give as tribute to the value of independent research on its own is that our generic list of buys tends to produce a better result over a bit longer track period on average. And I think that does speak to the value of independence, but I would still say through the number of calls we've had on the VList, tracking all the buys performance, the outperformance has been stellar, I think we would call it. Although not this year. Year to date, we're down about 150 basis points against the S&P TSX Composite Index. We measure based on total gross returns versus the S&P TSX, so dividends are in. And unfortunately, I don't know if you've caught our last video segment on the VList, we have a pretty good concentration in what we view as kind of lower risk and maybe income-focused names. Those themes don't tend to do well if the idea of higher interest rates for longer settles in again. In other words, if we're going to be pushing out interest rate hikes further down the road. Our view, though, still is that from a longer term perspective, given some of the uncertainty that we still see with the economy in general, especially in Canada, we like the dividend paying, good balance sheet based businesses that we see kind of growing that income anywhere from, say, 3 to 5% per year. With an asset base that is largely essential, things that we probably couldn't live without, like food and utilities and even the telecoms. and so we're confident that trend will eventually change. And there's 2 things that could do that. Ultimately, it could be finally we get that cut in interest rates that everyone's waiting on and I guess hoping for. But the other element that really makes some of our more defensive stocks unique is that if things do go awry in Canada's economy and we do see interest rates rise, risk premiums rise, some of the equities that we have in there as income, based on essential services that have good balance sheets, they tend to outperform when you see risk entering the market, or I should say risk aversion. And so that's kind of one of the, I think, hallmarks of this fund is as it said earlier on the slide, we want to be a bit of a golfing list of stocks. So there isn't the same level of volatility that we would have if we were going for, let's say, more growth on weaker balance sheets, which is something that, is always an alternative. We're worried because interest rates are still high with delving into that space. This just gives an idea kind of on how our calls tend to play out over time. The intriguing thing I see here is that our buys tend to take a little longer to play out. I think that's because there's a lot of buys out there. So when we publish a new buy, it might not be as, let's say, ground shaking. Whereas you put in a sell, there aren't that many sells usually out there relative to buys. So we tend to have a more immediate response to people saying, what's this risk that Veritas has identified? Should I be contemplating it as well? And again, this harkens back to the original slide on performance. Over the very long term, we've had pretty good performance on both the buy and sell side. As the last slide, just to go through again our sector allocation and update for this month, March 2024 being the most recent close. We're still mostly in defensive stocks. We've got some telecoms, very little financials, a little bit more energy. You can see what we're kind of going for here, I think. It's still defensiveness. There's a lot of income underpinning some of those defensive names that we really like because it's sustainable and growing, with a touch of things that we think could have disproportionate pricing power, specifically in the energy sector. And so that's kind of how our portfolio looks now. It's changed to be a little more risk-taking, I'd say, over the last few quarters. And that's largely a function of the idea that soft landing is coming into view. Pretty much as simple as that. And so with that, we'll close off. Very happy you could join us today, and always feel free to reach out if you have any questions to Veritas, to myself, Darryl McCoubrey, on the V-List or on the research we publish. I would be happy to hear from you. Bye for now.